We discussed the impact investing conference at some point of Arias bike conference, and I said, yeah, well, are you actually taking care of the issue of agriculture? And she wasn't so much aware that there is an area that is establishing in this sort, and quickly I got the job to help putting the panel together and as well to moderate it. Impact investing is a tool to make this a better world by combining profits and social impact. Education is seen as one of the major areas where you can have that leverage, but agriculture obviously comes up that ladder and is seen more and more as also a key issue to be addressed. I quickly want to show you a picture that I've put together just to show you the complexity of the topic, because it basically interacts with a lot of areas that most of us are not so much aware of it. It goes into soil, that makes sense, the quality of soil makes sense. It goes into the CO2 issues, as good soil as well could sequester CO2. So there's a lot of angles, most of them highly discussed these days is water quality, is food quality. Food security is something that's very high on the agenda on a lot of institutions, but also the conservation issue and biodiversity. You've heard probably the World Food System Center at the ETH in Zurich is taking up these issues. The EAT Forum in Stockholm, which is a private initiative, has started the first very successful conference, high level, last year in Stockholm. There's a next one coming up here. Even the World Exhibition in Milano has the slogan, feeding the planet, energy for life. So it is on top of the agenda of a lot of people, and the UN declared this year as the year for the good soil. So I think we're right in the topic. I've seen there's a lot of money going towards agriculture, not necessarily towards sustainable agriculture, but into the area. We know the keywords of land grabbing and so on and so forth. How can we more direct this money into making a more sustainable impact in it? So we know that the sector needs money. There's a lot of farmers who desperately are in need for money. But there's also a lot of investors who like to invest in that sector, but barely find a high variety of possibilities to put their money. So how do you make it investable within the impact investing environment? And what is the best practice so far? I have, together with Angelika, we have invited 4 experts in the field who have their own projects and some of them already for a couple of years and with an interesting track record. So I'd like to present Fabian. He's Vice President of Sustainability Affairs within Credit Suisse, which is the bank's competence center for sustainability issues. He manages sustainability risk and provides advice on impact products and other service solutions. He's part of the core team responsible for the Credit Suisse Nature Conservative Note, which he will introduce at a later point. Fabian has a background in political sciences, economics, and international law, and serves on several advisory boards. Coming from that political science and law perspective, what's fascinated you about the sector you are working in now, Fabian?
That's a good question. I think to be able to apply the educational background that I have in a very dynamic environment at the pulse of global financial markets for something which is very close to my heart, and I think to most people's hearts in this room, for the protection of nature. And to do that every day and ponder about the political, the economic, the environmental, the legal challenges, and how the projects can be implemented, that they provide impact to the people on the ground.
Great. Then next to Fabio, we have Mauricio Benitez. He heads the Risk Office and Agriculture Investments at responsAbility Investments, based in Zurich. He is responsible for the design and implementation of the credit risk methodology and lending procedures at their Fair Trade Fund. The fund is dedicated to investments in agricultural trading companies sourcing from smallholder farmers. Mauricio, has your relationship changed since you've been dealing with that topic? Has your consumption pattern adapted?
You mean organic?
Or looking into where it comes from?
Yeah, naturally, this is it affects, I think, all of us, particularly in developed countries. And what we want to promote is that through conscious consumption, you can contribute also to development and your own health. So yes, I think, yeah, it is.
Oh, cool. Thanks. Next, we have Adrian Wiedmer. Adrian is managing director of Gebana, the company trading with bio and fair trade products from sustainable sources in developing countries. He has initiated ventures in Brazil, Burkina Faso, Togo, and the Netherlands, and also participates in a company in Tunisia. Adrian studied at the ETH Environmental Science in Zurich, and he's president of the Fair Trade Association in Switzerland. Gebana, I've read on the webpage, means fair bananas. And it has been active for many, many years, I think about 40, and originally shaped much of the fair trade moving in general. Are you disappointed that there are still conventional farmed bananas sold in supermarkets today?
No. I think, does it work? Can you hear me? No. Now? Well, I need to. Okay.
You take this one.
I'll speak strongly, not a problem. No, I think banana is actually a very good success story in fair trade, with over 50% of market share. And I think what is most important is that practices are more fair and more ecologic, and not necessarily that everything is certified. I think it's not a nice world to think that everything is certified and we have a few people in Bonn or wherever deciding on exactly which trade and which production should happen.
Interesting. Last, we have Fredo coming from far to this conference. He is the president of DNR Chemicals, a pine oil manufacturer. He also founded and runs social enterprise projects in partnership with local indigenous people in southern Mexico, in a project that plants thousands of pine trees on indigenous land, providing the communities with a vital and unique source of income. He holds an MA in Russian and East European Studies, and a master's in business administration, both from Harvard universities. Fredo, what is your emotional connection to these pine trees? How did that come apart?
It's in the genetic code, I guess. My grandfather started this business when he immigrated to Mexico. And does the mic work? A little bit? Oh, good. Okay, finally. And so, you know, it's a millenarian tradition, 7,500 years of documented use, even mentioned in the Bible by humans in medicine and in all kinds of other things. So, you know, pine resin is a very noble enterprise and also a very powerful weapon against poverty, which surprises everyone. You'll see the video and you'll see why.
Thanks. Fabian, Creditas has drafted a note on the conservation issue. How did that come alive? Could you give us a short introduction? Possibly we had prepared a slide.
Yeah. As many of you know that are involved in the impact investing sector, most people would probably agree that environmental impact investing is about 15 years behind social impact investing. And if you look at the reasons why this is the case, there's nothing that seems unsurmountable in terms of challenges for the sector to keep up. There are a number of things on both the demand and supply side of products. There are a number of issues with regard to the complexity in structuring products, but basically everything can be achieved, within a reasonably short period of time, and you could have the same success in environmental impact investing as you have had in social impact investing. And we were of that opinion. The WWF network was of that opinion as well, and McKinsey is always up for interesting challenges. So we sat together in 2013 and looked at the question of what is the demand in the financing of nature conservation out there globally, and where are the challenges for the money to be found, and what are the possible avenues to address this problem on the supply side of capital. And we've come out with a study which was published at the World Economic Forum 2014. The title you see, you don't see on that slide, but it's Moving Beyond Donor Funding in Conservation Finance. And one of the findings, and probably the most important finding of the study, was to come up with, even if it's a rough estimate, an idea of, again, where's the funding today, how much do we need, where's the gap, and how can we address it. So basically, we looked at primary research in terms of where does the money go today, and what we found out is that about $50 billion per year are put into conservation. About 80%, the lion's share, comes from government and donations, philanthropy, which is not a really sustainable source, as we know, because obviously with the economic downturn, lots of government funding has gone back, and also philanthropy is often fluctuates around the success of markets. And only 20%, or on that chart on the left-hand side, about 10 billion are coming from private sector sources. The right-hand column tells you where we need to go, and that again is based on some primary research. There are a handful of studies out there that look at, what are the world's most important biodiversity hotspots, the number of national parks globally, and the average estimate is that annually to protect the world's most important biodiversity places, you would need roughly about $300 to $400 billion. That means we have a gap of 250 to 300 per year that needs to be found. And again, looking at the argument that government and philanthropic funding has its limits, and we assume the optimistic, assumption that this can double over time, there is still a very reasonable gap. And I think most people in the sector agree that this gap can only be filled with private capital. So that was the main finding. I guess what is important to put that into perspective, our McKinsey colleagues did some calculations and found out that there would be sufficient capital available if you just look at the entire investment that is done per year coming from the three main investor segments, which are retail clients, high net worth, ultra high net worth clients, and institutional clients. We would only need 1% of all new or reinvested capital per year that is put into conservation, and we would solve the problem just from a financial point of view. So that was the starting assumption. That was one of the findings. We've come out with a number of other findings in terms of how a product needs to be structured that it can be put on the market. We presented the paper at a number of occasions. We rose awareness about it. And suddenly inquiries came in from clients, from relationship managers that cover clients, saying this is all interesting, but where's the product? Where's the financial product that I can put my money into it? So what we did is we worked a number of months with an external partner who has been in the business for a number of years on structuring a very specific product that hopefully addresses this issue as a first of its kind, as a small product, but again, as one that hopefully proves that both financial returns and environmental conservation impact can be achieved at the same time. So how does the product work? It is a structured note, which is called the Nature Conservation Note, where 25% of the money goes into an impact investing fund, the so-called Althelia Climate Fund, a Luxembourg-based vehicle, private equity type fund that has a very peculiar business model. It goes into developing countries and looks for projects in emerging markets such as Peru, which I'm going to talk about in a minute, that always provides two different revenue streams at least. One revenue stream is carbon credits through the protection of forests, and the other revenue stream is one or several cash flows coming from sustainably produced commodities. In the case of Peru, that I'm going to talk about in a minute, it is cocoa. In other countries, it's coffee, it's timber, it's cardamom, it's pepper. Any commodity that can be sustainably produced and creates a premium on the global market if it's sold. So again, 25% of the note's investment goes into that Althelia Climate Fund. What the fund does is they work with local community-based farming organizations on either loans and or sale agreements. They help them scale up their business, and they get a share, the fund gets a share in the revenues, as does the local community. Repayment works through interest for the loans, and revenues, again, the revenue sharing agreement with the local communities once the commodities or the carbon credits are sold. Since the fund works with a very peculiar business model, they only have to spend 20% of their funding upfront, and the rest only goes to local communities on a pay-for-performance mechanism, which means that there is interest, I guess, on both sides to be performing, in addition to a minimum price that is paid to the local communities for the products that they produce. So that means that we had to face a question of we need 100% of money to be able to invest into the fund, but basically only 25% is used in the average case where all goes according to plan. And we spent a little bit of thinking about what do we do with the remaining 75%, and we could have just left it in the bank account, wait for it until the fund needs the money, and we would have transferred it. But we decided that given all the success that some of you may have heard in the green bonds market, we would put the 75% of the investors' money into green bonds until they're called by the fund, so they can provide an additional environmental impact and a financial impact to the investor in the notes product. The fund, once it has invested all its money, will deploy its money in about 15 to 20 projects in Latin America, Africa, and Asia. At this stage, they have already concluded 5 investments, and they hope to have concluded the remaining 10 investments by the end of this year. And I guess in terms of impact, we will see the first impact reporting will happen in about 3 or 4 months. So we will be able to see whether already initially we see some financial as well as environmental impact with regard to the projects. I guess more concretely in terms of how that happens then on the ground, I can talk a little bit about one project in which they have invested for a number of months already, and then for a number of years have been working with the local community on capacity building. So it's a project where the fund has some experience. And basically, it is a project in the Madre de Dios region in Peru, in the region of Tambopata, where the main problem is that there's a lot of illegal logging going on, basically for subsistence reasons, that poor local communities clear the rainforest most often already, slash and burn it, which obviously has even increased negative impacts on the environment, just for subsistence reasons. They need it to heat and obviously to sell the timber. And I guess from a macroeconomic and environmental point of view, that's obviously not an ideal process. So what the local NGO IDER has been tasked with by the Peruvian government is that they have been given a 20 years concession to forest to protect the locally the local protected area in the region of Madre de Dios in collaboration with local farming communities, and have come up with a mechanism through which they provide capacity building for the local farmers to produce cocoa in a sustainable way, so that they don't have to harvest the timber from the forest. The intervention that is done through the fund is that they have come up with a zone of about 4,000 hectares of certified cocoa plantations that they will run over a period of time. The fund runs for 7 years. Hopefully the community will run the project a lot longer, and will come up with a supply of about over 3,000 tons of certified organic and fair trade cocoa. At the same time, through the intervention that they produce sustainably produced cocoa in one part of the forest, and at the other hand don't have to cut down the remaining part of the forest, there are carbon credits that are produced and can be sold on the international market. So those are the 2 revenue streams that are provided to both the local communities and the fund. There are upfront costs for cocoa collection, for capacity building, for buying of furniture and tools, and also then obviously for the whole trading process then in relation to the cocoa of about 1 million for the fund. What is expected is that the project overall, over the lifetime of the fund, which again are the next 7 years, will produce about 20 million in revenues on the cocoa side and about 10 million on the carbon side, with, how I put it, with a fair share of the fund, which means that it depends a little bit on the success of the product and the projects, but basically, as long as the targets are met, it's about an equal share And if the if the targets are more than met, then the local communities will profit over proportionally compared to the fund. So in my view, a very fair model. On the carbon side, it's a little bit different because there's more work done by the fund rather than the local communities. So it's more the other way around. That the fund will profit over proportionally if it's more successful than assumed. Finally, the impact. I mean, about 2,000 farmers and by extension their families will be able to produce more commodities without a negative impact on the environment, in that case the forest. We will reduce deforestation and hopefully have a positive impact on biodiversity.
Thank you. Thank you, Fabian. responsAbility has also set up a product, although being the recognized microfinance asset manager on fair trade. Maybe you can explain us how this was the initial motivation and how it is structured.
No, it's okay. Yeah, we are an asset manager, so we set up products, funds. And in 2003, our initial goal was to target sectors that have a strong impact on economic development. So we identified finance, agriculture, energy, health, and education as key sectors. Our mission is basically to bring together responsible investors in developed countries with companies in developing countries with simple and scalable business models that can support this impact. How to do this? We from the beginning we believed in the financial sector, so that's why our funds are basically publicly distributed. Our flagship funds are the main investors are public, private individuals. When we wanted to set up the funds, we said which sectors could be the most attractive. At the beginning, as Heiko said, we targeted finance. Why microfinance? Because it's something that you can scale up really easily. But we also realized that our clients demand direct investments. Our clients want us to invest directly in companies that support growth. When you invest in microfinance, normally you invest in banks, so you're a second-tier investor. In agriculture, what we do is we invest directly in particular SMEs, that they aggregate impact, because normally they source from smallholder farmers. And why agriculture? Why agriculture is amongst these key 5 sectors? We conducted, of course, a lot of research, and as you may know, 70% of the poor in developing countries, particularly in rural areas, depend on agriculture for their source of income. And this income is volatile. So what we wanted is to identify phases in the value chain that we can reduce this volatility. The final goal is to improve yields. That as you may know as well, a 10% in yield could increase or decrease poverty by 7% in sub-Saharan Africa and 5% in Asia. So if we provide good access and timely access to finance in key parts of the value chain, we can actually have an important impact on development. What we target is mature and small to middle-sized aggregators, because our main goal is basically to improve or have impact through numbers. One important part of probably the analysis was to identify the current gap. There was a study that shows that about 450 million smallholders lack access to finance. So it's difficult to get to those smallholders, but we identified that particularly SMEs, they demand annually about 13 billion in net investments. So if we finance those investments, we could get to those smallholders. What we realize is that the international offer supply, it's about 400 million. So you can really see the gap between 13 billion and 400 million. So there's a lot of room for an international investor and asset managers to develop products that could really reach to these smallholders. But as you may also wonder, is we should have a business case of responsAbility to make it sustainable, because you need to develop products that in the end are a win-win-win. Of course, we have proven that there's demand, there's impact. We think that we will serve our investors well, because we will deliver return. But for us also it should be sustainable. At the beginning, the business case was a bit murky. Why? Because it's very costly. It's extremely costly. It's difficult. So during the first phase in 2003, we focused on microfinance. So we will grow. By 2010, our flagship funds, they grew to 800 million under management. So that's an important size, and also the track record. Let me tell you, doing microfinance is easy. When I started the company, it was 300 million, and we grew to 800 million really easily by being efficient and believing in numbers. So for us, efficiency and numbers, that's what improves impact. But we realized this is because in 2013, our first investment was in agriculture, and we realized it's very difficult. So in 2010, we also realized that we were being labeled as a microfinance investment vehicle, which is awful, because we wanted to be an important actor in these 5 key sectors. But all of a sudden, we were a microfinance investment vehicle. That's it. And it was true because only 5% of our investments were in these other key sectors. So in 2010, we said, and we took the challenge to develop the first product targeting agriculture retail in Switzerland. So we approached FINMA, we convinced them that through our first flagship fund that we could do it. FINMA, of course, took their time in their analysis. 1 year later, we convinced them, and they allowed us to offer this product publicly. At that time, we knew how to invest because we've been doing, but on a limited scale. But when the fund was launched in 2011, it was very challenging, of course. And we had to invest as we speak, and as we spoke, and it was like flying or developing the aircraft, building the aircraft while flying. So it was extremely challenging and costly. Let me tell you, it's still not profitable for the company. The company is still losing on this product. So the other products are subsidizing this product. The management fee is not covering fixed costs. But why we keep doing it? In our business plan, we know we will break even. The fund is doing pretty well. But we also have shown that we can do more than microfinance. We can do a product that's completely different. And with that track record, actually, we are pushing forward with energy and health mainly. So we have developed other products. So the investors, they are giving us the benefit of the doubt that says, okay, you took microfinance, you grew, you are doing it well. Agriculture was very difficult and completely different. You are doing it also now apparently well. So let's see how you do it in energy. So for us, even though it's loss-making, for the company, it's been a key strategic step. So the win-win-win is getting there. Now, Probably just features of our product. It's 3 years track record. We have reached 110 million under management. We're invested in 30 products, so 30 commodities. So in 40 countries, so it's very well diversified. More than 90 counterparties. Actually, now is the best performing product in our portfolio. It's 12-month return is over 4%, which is in our current environment is very, very, very impressive. Challenges, as mentioned, probably it's setting up the team, origination team that they can develop this diversification, and setting up the lending procedure that all of them they can speak the same language and look at the key risks. Currently, the portfolio is performing well. Actually, we invested in Adrian. Is one of our first investments. We learned a lot with Adrian, actually with Gebana. It's a very interesting company, and I think the main challenges will continue because we want to move along the value chain and do more long-term investments in equity. But so far, this is our experience. So.
Thank you, Mauricio. And you made the right link already to Adrian, and who's now on the other side of actually looking for money for his various endeavors. So probably you give us a big insight on what Gebana is doing and where you see the future.
Well, thank you very much for the opportunity, for the invitation. I think I understand now why we are invited, because to a very good example to illustrate why it is so difficult. I will tell you a little bit about Gebana and then about the organic and fair trade market challenges with an example of our venture in Brazil, and then a few hopes or wishes to the venture investing community. So Gebana is a pioneer in fair trade and organics in Switzerland. We've started as an association in the 70s and are a company for some 15 years now. Today we have ventures in these 4 countries, Burkina Faso, Togo, Tunisia, and Brazil. We sell some 20 million of Swiss francs. We have a direct sales operation with 25,000 end customers, and we sell the products of about 5,000 farmers. We have in Switzerland 25 employees, and all over the world it's about 600. So we are a small, medium company. It has taken 13 years to make the first profits, but it happened 2 years ago. What is a little bit special for our business model is that actually we are in contact with the farmers, so we have contracts with family farmers, and we have contracts with end customers. So we sell through a direct selling model to the end customers in Switzerland and Germany. And we sell, of course, to industry and trade throughout Europe. The plan we have now, as we finally made profits, is to build another 5 ventures within the next 6 years. So we believe we have found some sort of a business model which works, and we hope now to scale it a little bit with the experiences made. Well, the organic and fair trade market is a very interesting market because it grows for years with double digits numbers. It's a multi-billion-dollar market. But it is also extremely fragile and volatile. Volatile because of the nature of the business itself, the weather, for example, because of the fluctuation of the prices, sometimes very impressive, and the risks then involved. And this is especially the case in this small area of organic and fair trade because it's not a well-structured market. So there is many idealists like ourselves starting up, trying to do something, making lots of mistakes. There is a lot of startups in general. There is many niches which allow this, so high margin business, which allow ventures to start with nice business plans, but then eventually there is consolidations, there is problems, and I think these 2 factors make this market extremely challenging. I will tell you a little story about Gebana Brazil, which I think illustrates very well all the dangers we are in. So we have started with soybeans, organic soybeans, in the middle of a sea of conventional, very tough, strong, productive GMO production in the south of Brazil. That was 2002, when GM was still sort of so small, it was even forbidden. But then without a few years, it really exploded, and today it feels like Asterix and Obelix in their village, all around in a big sea of all these very strong conventional companies. And this is only part of the problem. What then happened on a small scale for us was we were selling these products, we processed them for tofu, for feed, for cosmetics. And then all of a sudden, when I lived there 2007 and 8, I became aware that there is a lot of very nice organic farm inputs, an organic herbicide, an organic insecticide, an organic pesticide. Mr. Landal is laughing. So anyway, all of a sudden I became aware that this whole system was built on fraud, actually. And then with a few colleagues we investigated it and let it come to light, which then eliminated 2/3 of the production, organic production. But it also created a lot of problem for us who thought we would be very nice positioned afterwards, because in fact first the whole export from Brazil was blocked, so also us, because from the point of view of Europe it's just, you know, Europe is nice and Switzerland is nicer and all the rest of the world is not good. So that was the first problem. Then the second problem, all these friends we made with this action actually then made us understand that also some of our farmers weren't really producing correctly, so that was the second blow. And then the third one, which was the worst, is that we then established a very tough analysis scheme very early in the harvest, and we found out that there is a broad contamination with tiny traces, very tiny, but still traces all over of endosulfan. Endosulfan is a pesticide forbidden for 30 years in Europe, but still deposited, it seemed, to the conventional agriculture in these sort of remote areas. So we then conducted a big study to find out whether or not our producers were actually applying these pesticides, which they were not, luckily, but they were just ubiquitous in the system. So what to do? And it took us another year of problems, and then we helped to actually fight for the ban of this endosulfan. We didn't reach ourselves, but we contributed to it. It was banned, and now today the problem is solved. But all these consequences led to, of course, very big financial problems, a lot of debt, a lot of interest, and then a restructuring when we made friends with responsAbility and also shared interest in Heiko Credit, who helped in this restructuring in 2012. Today we are fine again, so we turned around in 2013, and last year was break even, and now I think the perspective is good. But the challenges remain very big because of this image, what I showed you about Asterix and Obelix. It's all about developing techniques for the organic production, and it's also a challenge to find the right seeds, non-GM, in the long term. So there is a lot of very difficult questions, which actually, for you guys as investors, makes it very understandable that maybe there is not yet a lot of investments in this sector. So my wish is then, concluding from this experience, is first, it's like a paradoxon, but it is a very volatile and very risky environment, and because of this you should have an extremely long-term perspective. Because if you do not, you will just act pro-cyclic, and this is disastrous for a company like ours, because maybe we need 5 years, 10 years, but if the underlying is good, we will eventually make it. But you should not be scared of the ups and downs in between. And connected to this is the courage to trust. I think especially in these small companies, you should do a very good due diligence first and look at the people very carefully, but then you should let them work. If you want to have new Excel sheets every half year, and another one between the decision and the disbursement, it's just confusion, and then we come to the next and last recommendation, which would be speed. Is although we are small and it looks sometimes might be like a little bit like NGO, we are in a very tough and aggressive environment, and this is all driven by weather, by harvests. So if we need the money in December, then we need to have it in December, and in February we're dead. So basically, this requirement is, I think, very tough, and maybe explains why it's not so easy to invest in this area, but I think it's very rewarding because without a doubt, if we talk about impact, there is nothing better probably than agriculture.
Thank you, Adrian. Yeah, it's always a long-term perspective that it's key in this sustainable environment, and we keep forgetting. But in the long run, you optimize your profits, and then you maximize them, because generally it stabilizes over time if you look at the harvest and return. Last, Fredo, I'd like to ask you to introduce a project in Mexico with pine trees. You want to sit there, or you want to come up? You just try to get the video going.
So thank you very much for inviting me. So Angelica, muito obrigado. To Heiko, I guess, danke, merci, grazie, and how do you say it in Romansh, the local language? But for the rest of you, does this work? Yeah, muchas gracias for being so involved in sustainability in Latin America and believing that we can actually make progress. So, recently I ran into the head of Kiva, Premal Shah, this very brilliant young man, in a conference, and I told him, oh, by the way, I'm one of your partners, one of your recent partners to Kiva. Kiva has something like 300 partners all over the world. In Mexico, there's only 11, and I'm one of them. And he remembered exactly every detail of the partnership, which is pine resin. And I said, well, you have 300 partners, and you have about 2 million clients and 2 million Kiva lenders throughout the world. How do you remember my project? And he said, oh, because it is so strange and so unique and so weird. We actually spent a lot of time debating it inside Kiva before we decided to actually fund it, So that explains perhaps why, what did Kiva like at the end of the day? We're establishing a plantation, a pine plantation the size of Boston, or 12,000 hectares, as you saw, 24,000 football fields, of native species of pine. But these trees will never be felled. They will never be cut for the wood. So how can they provide income year after year? About $18,000 per capita, which is more than the average Spaniard, white-collar Spaniard makes in a year to each tapper. Well, the pine resin, if this was Gatorade, which of course it's not, but say pretend this is a Gatorade, pine resin would be in 3 things in this one bottle. It would be in the glue that sticks the label to the bottle. It would be in the ink. And it would be inside the drink itself. It's an emulsifier. So it goes into 50 different applications. In antiquity, 5 of them, mummification, we were talking medicine. And in the Bible, even God himself mentions pine resin when he orders Noah to build an ark of gopher wood and seal it in pine resin pitch. So pine resin is a very useful thing, although nobody even knows it exists. 12,000 hectares is going to produce about $1.4 billion in the next 30 years for these tappers. And for the tappers, these indigenous people, 30 years is nothing. For a banker, now that's the big weakness, The bankers didn't like this. Until Kiva came along, it was very hard to raise money for this project, even though, as Mauricio would call it, a win-win-win project. Why? Because it brings the aquifers back. Pine trees protect the aquifers, unlike fruit trees or avocado trees or eucalyptus, which is the green desert. It destroys ecosystems. Pine trees and the native pine trees protect the aquifers. The problem was with the bankers. When I told them that income doesn't begin until year 10, begins at year 10. Of course, I was laughed out of more than one banker's office. And the worst were the so-called development bankers, because development banks, there's no such thing as a development bank. It's basically a bank run by bureaucrats. And the problem with that is that if bankers barely can run their banks, bureaucrats should come nowhere near banks. And I learned that the hard way dealing with this thing called the Inter-American Development Bank and this other thing called the International Finance Corporation. And this thing in Washington called it's called OPIC, the Overseas Private Investment Corporation, said my project didn't qualify. And I said, why? because, well, how many tribes live on that land? And I said, well, it's only one nation, and it's Purepecha people, right? And they say, well, too bad, because here it says we need diversity in order to invest in your project, you know? So until Kiva came along, I thought I was going crazy. But then Kiva, you know, made me sane again, because they got it. They understood everything. They're people just like you. They're young people, they're good people, they're, you know, they have their heart into it, but they're also very business savvy. So, so the fact also that this project is being planted on indigenous lands. We're not buying these lands and developing them ourselves. We're actually developing their lands, which are collectively owned. Also, the banks didn't understand that. But now, finally, we have found some investors. Well, besides the Mexican government and ourselves, which have been the ones that have established so far 1/4 of this project, which is 3,000 hectares. By now, we have established 3,000 hectares. We have created an investment vehicle and found two Mexican investors, which was a surprise. I guess Mexico does have capital for things like this. We didn't need to go abroad. And both of these entities are over 200 years old. So I guess, you know, you need an investor for such a long-term project going forward. You need somebody who has been there for, well, 200 years in this case. So what's the lesson for you, for these students, is that this is the most exciting industry to be in right now. It is almost like the web was 20 years ago. So, and you're gonna have the capability of transforming lives beyond, you know, not just giving a 7% return as opposed to a 4% return to some fat cat somewhere. No, these Purepecha people, in fact, when something I learned, I was surprised. I've been dealing with them all my life, and I never realized that pine resin was their main source of income. And I'm their main buyer already from their natural forest. They produce this resin, and I develop it into the products that go into, you know. That sunk my heart, and that's when I realized, my God, I should have been doing more for these people for a longer time. If pine resin is their main source of income and we can triple that, that's something you tell God, you know, when he asks you, what have you done for humanity? Thank you very much.
Thank you, Fredo. I have many questions myself, but due to the time constraints, I'd like to open the floor to you guys if you have questions to the speakers and the topic. I think we have about 5-10 minutes. 5. Here we go. Yes, please.
So, Fredo, into your business model, it wasn't clear. Do you buy the production from those families and resell it to the big companies? What's your...
I'm the big company. I'm the you know, capitalist pig with a cigar and top hat, but I try to do good for the world as well. I mean, we buy the pine resin, and that in itself is good social business model, even if it's purely business. Fortunately, in my industry, social and business are wedded inseparably. So what am I doing? I'm buying the pine resin from the natural forest, from these indigenous people that already tap their natural forest, but the natural forest has maybe 60 maximum pine trees of these species that produce resin per hectare. What we're doing is establishing 800 per hectare, which makes it much easier for them, and that's why it triples their income. So yeah, I buy the pine resin, I transform it into chemical derivatives. I'll name you one, partially hydrogenated glycerol ester of gum rosin, you know, which goes into chewing gum, for example, and then we ship that to a factory in the United States that makes it chewing gum based. So yeah, I'm the transformer, I don't resell.
It's awesome. Congratulations.
Oh, thank you.
You were.
I just had a question regarding the varieties of pine that you grow in the region, and you just mentioned 800 per hectare versus 60 that were in the past or that were commonly found in the area. Isn't that, and you also mentioned green desert through the eucalyptus plantation, and I would like to understand, from my perspective, I thought that the green desert was also pine production, so I would like to understand better this.
No, pines actually protect aquifers. They put more water in the soil and prevent erosion than eucalyptus, which kind of by nature, it comes from Australia. It was sent to Latin America back in the 50s or 40s because it's a very fast growing tree. But the problem is that it kills off other species. It has chemicals that it kills other species, and it absorbs a lot of water. So that's why they call eucalyptus plantations a green desert. Not pine plantations, no, absolutely not. In fact, pine plantations for resin tapping already exist in Brazil. And so this Brazilian connection to this conference, Brazilian connection very strong also to my project. As for the pine species, there are about 130 pine species in the world, all of them in the northern hemisphere for reasons that only God understands, but only 13 of them are producing resin on a commercial scale, pine resin, of which 5 are native to Mexico. So we're blessed. We're #1 in diversity of pines in the world, 48 native to Mexico.
So Fabian and Mauricio, would this be a project that you could take up in your structure, in your vehicle?
Yeah, too bad he didn't talk to us.
We're talking now.
It's extremely interesting. I mean, our fund could take it this year because it's an open-ended fund, and it would increase diversification. In theory, yes. I think we need to expand a bit the criteria because this is forestry, unless the smallholders, because we, for example, find in Brazil nuts in Bolivia that is not farmed. So there's impact. So I think it could be interesting.
You had another question, Maria?
Yeah, there's a question for Fabian. So you mentioned that you were looking for a series of products, and you showed, is this just one that you developed, or do you end up developing different products for your clients? And I noticed that this one says it's not for sale, so is that something that actually already been implemented?
Yeah, 2 questions. So the first one is, this was the first product, and we will hopefully work on other products this year and next year. And the second one is, compared to some of the funds that responsAbility has, which are open-ended funds, this is a closed node, so that means it's no longer, it wasn't for sale in some countries, and it's no longer for sale in any country because it's closed. The fund closed, our node closed, the number of projects are limited. We will work on a new product with new projects, but that one is just closed. It closed with 15 million euros, which we raised within 10 days.
Okay. So it was interesting to see what kind of appetite your client base had based on what you had identified earlier, and if you see that Suisse is going to work more in that space or not.
Yeah, no, it was really interesting. We only had the experience from social impact products and microfinance, where there is a long track record together with responsAbility, and investors understand that topic. So it has taken us a long time to raise awareness about what actually conservation finance is, how sustainable agriculture works. Once we've done that, there was a lot of interest because, again, some people prefer social issues, other people prefer environmental issues. And that was an interesting finding. In terms of demand, after we closed the product, there was a lot of additional demand. So we will hopefully see that for the next product as well. And then there are just, very simple things. We traditionally have a lot of interest from Latin American investors in impact investing products. We got 0 investment from Latin America into that product. Why? Because it was in euro. Very simple thing, which we had to do because the fund was in euro. So sometimes it has to do with currency issues rather than the complexity of the product.
You had one last question there.
How to understand their impact, and this is my question, how to do business with this group.
That's an extremely good question, and you're right. My model is not very replicable. That's its weakness. The purépechas are unique in many ways, and one of them, they're very organized. The good thing is that they've been tapping trees for over 2,000 years. In fact, their competitor, the Aztec Empire, they're the only nation the Aztec Empire couldn't subjugate, had a goddess of pine resin called Zapotlatena. But the pine resin came from these purépecha areas. So they've been doing this for thousands of years. And if you just buy their commodity, just by the very act of buying their commodity at the market price, you're already doing a social thing. The interesting thing, recently we honored the purépecha in, the Berlinale, the Berlin Film Festival, has this huge thing called the Cinema for Peace Gala. And all the German movie industry is there, producers, directors, actors, actresses. And here I come with my 2 indigenous friends, in the full costume, their traditional costume. Why were we honoring them? because they are the ones that overthrew the horrible dictatorship of Mexican organized crime. The cartel had taken over all that area and so was subjugating them, destroying their forests. These people rose up, they organized. First, the women are the ones that organized, rose up, stopped the trucks, taking all their logs from the forest, and they lost 23 members of their nation, but they overthrew in their area and the cartels. And once they did this, the rest of rural Michoacan, the state where they are, the rest of rural Michoacan also rose up with a leader that they formed called Dr. Mireles, I think. They rose up, they got their pickup trucks and their shotguns and basically chased organized crime away. So they did a huge public service and nobody ever recognized them. They just did a movie called Cartel Land, which just focuses on the rural Mexicans but not the indigenous ones. So we're trying to work on a documentary about the Purépechas. You'll never find somebody more trustworthy, in Mexico at least, than the Purépecha people.
Angelica gives very strong signals to continue in the program. Thank you very much for your attention. Thank you very much to your presentation.